Hello guys, so once again it's your boy Joshua and you're welcome to my channel Zenith Trade. So if this is your first time on my channel, what I do here is I document my forex journey, my trade with life account, and also I teach on my strategy I use. So I'm a mixed trader, kind of a chemist, but my main strategy I use is SMC strategy for my entry model. So if you are confused of what I trade CROT as my daily bias, and I look for key levels on my medium time frame, which is the 4 hour, 2 hours, 1 hour, and I use my entry model advanced SMC to enter for my trade. So if this is your first time on my video, please do well to like, subscribe, give your support by commenting, giving me advice on any thing you think I'm doing wrong, so I can be able to pick from those advice. So without further ado, I took a trade last Friday, which is yesterday, and I'm about to show you how I spotted the opportunity and how it ended up a loss. So though it's a loss, but my bias was right, and but price went and stopped me out. But it is what it is. Sometimes that is how the market works. Though I'm not going to put the blame on the market, but it is always our fault. So let without further ado, let me quickly go into the chart and show you how it is. I spotted an opportunity on UGP last on Friday. So this was what I saw. So let me just delete this. You can see this CRT candle right here. This big wick candle. Let me zoom out for you guys to see. So yeah, this is it. You can see this CRT candle so big, and I look at the rejection candle, and I spotted that it's actually rejected from this key level. If you watch this key level, this at this point right here, this point, this candlestick right here, you can see there is an OC key level that got disrespected after price gave an OC key level, and this candle actually disrespected the OC level, and it gave a break of structure to the downside. So price went there and medicate it, which was this my CRT candle was actually aligning with. So I just marked up and I went to the 2 hour time frame, because I use 2 hour time frame now for my breakouts, so I don't want to complicate things a lot. So this was the rejection price gave on the daily time frame, and if you look at the daily time, so I came to the daily time frame and I observe this third candle, like this 1, 2, and 3, this third candle right here. This was where this second CRT candle took liquidity from. So I just mark it out, because after a CRT candle, the next candle is going to medicate this other candle price took liquidity from before coming to the downside. Or sometimes the next candle opening might come to this top area before coming to the downside. So I mark it for me not to be very confused. So I went to the 2 hour time frame, which is aligning with my which is where my entry was. So I was kind of confused for this trade, but I actually got it right, but I actually got stopped out. So I saw the breakout. This was the breakout. After the daily CRT candle, you want to see a breakout on the lower time frame, confirming our daily bias. So the 2 hour time frame was actually aligning with my daily bias, which was this breakout right here. We got this week breakouts where price week this our previous low, because what you see this higher highs, higher highs where price took liquidity from this low and went up. So this was our low right here, price week, and gave a change of character right there. So I went on the 1 hour time frame, and it was very clear. So no need for me to complicate things. I quickly jumped to the 15 minutes. Now the 15 minutes candle, I was looking for the liquidity, which I actually spotted this liquidity right here, because after the change of character right here, this is my advanced SMC entry mode. After the change, this pullback right here, where price gave a shade of character on the 2 hour time frame. It went up back there and start to induce early sellers. Before I know that this stock is going to be a liquidity sweep, so I was so confused of the already identified my liquidity sweep. Now I'll show you why this place is a liquidity. Let me not get you confused. So we see this price making higher highs, higher low, higher highs, higher low, right? So we got and a break of structure, a change of character on the 15 minutes. For you not to get confused, on the 15 minutes, and we got a little pullback right there. Let me clean it, okay? And we got a little pullback after the change of character. So price keep coming down. This was the last pullback. This was the last pullback before price gave this change of character. You now like wake up and start to before come down and start to. So I know this is going to be a liquidity because in our 2 hour time frame, let me switch to the 2 hour time frame. So this is something I always want to consider. If you look at the 2 hour time frame, our 2 hour time frame, you see we don't really have a break of structure on our 2 hour time frame, except this one right here, except this break of structure. So we are expecting price to pull back before coming to the downside, which I know that this is going to be a liquidity. This week right here is going to be a liquidity because there is an involvement right here. This is so very fishy. I mean, if you look at the candle, you see it's so fishy somehow. So I went to the 15 minutes time frame, and like I said, I was kind of confused. I even if I've marked my key level, my liquidity, I couldn't see any key level right here. So the one I saw was this key level nearing our liquidity, but I didn't choose this key level. So I went on the our one time frame, and what did I see? I see a nice key level right here. This key level, as you can see, there is a lot of resistance right here. Price come and rejected, it come back rejected. Like it has 2 rejection candle and 1 OC key level right here. Also, it is having this our CRO high right here. This our CRO high on the daily time frame, our CRO high on the daytime. So everything is aligned. I know that there's a lot of sellers waiting to push price down, which I actually marked up. So I chose, this was the key level I chose, nearing or to our liquidity, yes, or inducements, anyone you want to call it. So this is how I trade now. So no faking it, price actually came down. It's actually after coming down, after price tapped my order and it just came down. I was happy at first, but after giving a change of character, it went all back, taking me out before coming down again. So I'll quickly go to the new GBP JPY. After this liquidity sweep, price formed a CROT, and I look at the left. This was the key level. Price was actually reacting from on the daily time frame. So I got my bias that this is actually where price will be targeting this other high right here. So I was looking for buy to the stop side. So I went to the 2 hour time frame. On the 2 hour time frame, I already saw the breakout. On the 2 hour time frame, this was where I saw the breakout. As you can see, after this let me give you a structure explanation. Price gave a higher highs, a higher low, a lower high, a lower low. Like price rejected from this after breaking before coming on the downside. So I marked this as my breakout. This was actually the breakout I used. So 2 hour time frame was confirming the breakout. I got my daily CROT for buyers, and also my 2 hour time frame is actually confirming that yes, the daily time frame or daily bias is right. So what did I do? I quickly jumped up to the 15 minutes time frame, which was the first wrong thing I did. So I was, instead of me waiting for price to come back to this range, I just ignore it and I just saw a setup and I was happy to take it, which is this. Remember on the daily time frame what we did, where price gave a higher low, higher high. Price never medicate any key level, like it never come deep into, I'll say, the equilibrium level, which is, I'll say, 50% of the this previous range. So price just went up, and I know that this guy was liquidity. Price took it and price went up. Now it did the same thing again. It did the same thing all over again. So prior to this break of structure right here, let me mark it. Now I was using my advanced SMC entry model to, to look for a trade. So this is what I do on the 15 minutes time frame. So after this break of structure, price did the same thing again. This high, this low, it never medicates the 50% level, and it went up again. So I know this is going to be a liquidity. Now I have a liquidity on that. Where is going to be my entry? This is one question I always ask myself. So what I do, I spot an OCK level right here. This was my OCK level I spot, and I also spot a fair value gap, which was my entry. Actually, which was my entry. And if I look at the left, you can see this head, like something like head price went up, give us a fake breakout, and I just marked this level right here. So everything was aligning. Basically, I'll say technically or logically, my fair value gap right here was the real entry I used. So let me just mark it. So this was my fair value gap I used. So this was my FVGI mark. So I was hoping that price will come down, take liquidity. For sure, it did. It did for the start. So the momentum was actually crazy. The momentum was crazy, but price reversed. Now, why I lost this trade, I'll say I took this loss very personal, because I have one rule that if I'm having 2 points of interest, I will take my first point of interest at 50% of my take profit level. Like this was my overall take profit, so I would have target 1:2 and just leave, but I didn't actually. I'll say I actually forgot it. I forgot it because it is a new rule, so I'm not kind of be more aware of it. So my second point of interest was here after the liquidity sweep. I was aiming for the V-shape level. As you can see on the line chart, we have the V-shape level. So that was my second point of interest. So there's it. As you can see, price stopped me out on the first one, came into my second point of interest and gave the reaction. Once again, I was happy, but unfortunately, price just sink down, stop me out before going to the upside. Now, so what I did. Now, I asked myself, what was the wrong I did on this trade? So I went to the 2-hour time frame, and there's something I did wrong. Though the setup was so aligning, the setup was so fresh. I mean, a lot of people took the setup and they got out 1:2. So I guess my mistake was, trying to swing for the fence. But it is what it is. This is my actual setup, and this is how I trade. So it is what it is. There is a probability for it. So this was my break of structure, where price actually came back to the range after this break of structure. I mean, after the change of character right here. Let me mark it for you guys not to be confused. So this was my change of character. I normally use the week. So this was my change of character. So we have a shock. So we have the shock, and price give an inducement, like we always do, like we always see after price gave the change of character. This pullback was an inducement before price went up. I actually didn't spot it. I was trying to just ride the momentum before the price can give a change of character on the lower time frame, before I'll wait for price to get to my before taking the long buy. So this was my mistake, trying to ride the momentum, whereas price never have not come back to my range. This was just an inducement. So I was trying to ride an inducement. In fact, all my entries was actually at the inducement zone. So price gave an inducement for sure, came down taking the inducement out before giving a big bullish juicy candle. So I went on the 1 hour time frame, and though I didn't spot any place price was reacting from, it was my 15 minutes time frame I really saw the where price was reacting from. So as you can see, price was reacting from this other block right here. Or okay, this key level is not another block. Okay, price was reacting from this key level. This key level. So if I switch to the line chart, you will see that it is a key level. It is a key level. It actually took liquidity from this little low right here on the line chart. So it is what it is. I've spot my um mistake, so let me mark it very well. So this was the key level price was reacting from. Once again, this inducement, this was an inducement, and this inducement, anytime you see an inducement, you have to say where is the nearest key level. So I just know that this was the key level price reacted from. So it is what it is. My mistake have been made, and I've actually learned from it. That's the only trade I took this week. So and it ended up a loss. I set a break even on one, and the rest was lost. So I lost. Well, concerning my profit account that I'm on the drawdown, I'm not really panicking. I mean, this is the process. I've been there before, and I've done that where I was actually panicking, where I got to the lowest point of drawdown, and I was able to recover those uh, losses, and I was able to pass the account. So, but presently I've lost it again. So I hope this uh, doesn't happen again. But once again, it is what it is. So once again, you are welcome to another section of this video. So what I want to talk about is if you as a trader and you have been in this game for I'll say the recommended year of becoming profitable and you are not, I'll tell you that the thing you are actually doing right now, trying to look for the perfect signal, trying to look for the perfect setup, trying to look for the perfect strategy, I'll tell you for free, that is actually not going to get you anywhere. You see, though you need to have a good strategy and a good trading system, but the thing is, the problem is actually you. Yeah, no, I left my strategy, but coming into another strategy, I realized that the strategy is not my problem, but it is anyway. I've chosen to be stuck with this strategy and try to master it consistently. But I'll tell you for free that your edge, especially when it comes to profits, when it comes to winning trades, it's actually in your hand, not the market. So I've been trading for the past 2 years now, and my worst experience is complicating things. So I've been trying my best to keep things very simple when it comes to trading. This actually allowed me to see the market very very clear. If back then I complicate things trying to form something that is not there, but I've actually realized that those things in trading don't need to be complicated. Those trades you have won, those trades you used to pass account, those trades you used to withdraw profits, think about it. Were they actually stressful before you took the trade? I don't think they are. So your win trades are not actually stressful. So why, if you notice the current situation you are, which I don't really know the kind of situation or challenges you are facing right now in trading, but if you as a trader and you keep losing, ask yourself, those days I used to trade very well. What are the things I did right and for me to see a lot of profits? So this was a question running through my mind, and I was in a very, very, I would say, healthy condition where I was very calm, where I was trying to, like, I didn't complicate things. I see the market for what it is. I really patient. I was disciplined to wait for my trading edge to appear before taking it, and I manage my expectation because the market is moving in probabilities with probability. So it is what it is. My rules, I've gotten some rules which I got from back testing, and one important one is from my daily time frame to my entry time frame, all of them must be aligned before I actually jump to the lower time frame. Like if I don't see my daily CRC or reversal candle, there's no way I can possibly go to the lower time frame and look for my trend. And even if I see my daily sell or rejection candle, if I don't see breakout on the 2-hour time frame, I don't go to the 15 minutes and look for entry. So this is the most important things. Your time frame needs to be aligned, because the higher time frame is building the lower time frame, for, or say, for better chance of winning. This is what I've understand when it comes to top down analysis. So it is what it is. If your higher time frame is not aligning, definitely the lower time frame has not built that structure you will want to recognize as the edge for a higher probability for you to win the trade. So my friends, it is what it is. Once again, it's your boy Joshua, and it's channel in Zenith Trade. So see you another time on my next video.